Eugene, something like this. And well, his indicator, I will just show you like on a chart how it works, because I based this EA that I have developed on this harmonic patterns, but it's what I'm going to share with you today is the money positioning strategy, which is the thing that fixed everything. So let me show you just, for example, what is the Zoop. Zoop is in brief, let me just change this charts time frame 1 hour. Okay, so for example, it will draw for you like these on the chart, you know, like harmonic patterns. You know what's harmonic patterns, yeah?
Oh yeah, yeah,
okay.
Yeah, I have that.
Okay, so now there hasn't been, for example, why did I choose harmonic patterns? Because they are price based indicators. So it's not like an indicator, they are price pattern based indicators. You know what I mean?
Yeah.
So they are not like indicators which are lagging or anything like that. They are like price based indicators. So they depend on the market, and they develop as the market develops. It's not like the RSI or any lagging indicators. They are like, they give you the news after what happens. No, the harmonics, they give you like something called a PRZ, which is a potential reversal zone, which is this red box you see here.
Yep.
Okay, and it will tell you how it will reverse. Now, what I did with this EA, I based the targets and the stop loss on the average daily true range. You know what's an ATR, yeah?
Yes, I do. Yeah.
Okay, so I made the stop loss 20% of the average daily range, and the target 80% of the average daily range, or 60%. It's up to you, but it will have different results. Now, based on the 1 hour chart, okay, let's just make a small test so you can see what will happen. Let's take, for example, the Euro US dollar. So just to make things easier, because everybody has something. Okay, this is like the Euro US dollar. Now, let's put the thing, it's here. Okay, on the Euro US dollar. Now, the way how I do it, first, I take the last year. So this is like the last year. So this is today and today, and I want 2020. I just want 1 year for the, it's called the testing. And then we will choose out of sample. You know what's in sample and out of sample?
Yeah, I think so. Yeah.
Yeah, in sample is the because here the indicator we will choose like $10,000, and we will choose the inputs. Now, what I will be sharing with you today, the most important part is the size progression. All right.
Okay.
Now I will set it to 1 because I need to find the information I need before we start growing this. So I will make it like 2080. Now this 2080, it means 20% of the stop loss is 20% of the average true range daily percentage. And the target is 80% of the average true range percentage, okay?
Okay.
Now, what this will do when we run it, okay, maybe I can show you as well how it works. It will be more interesting. So let it just get some. So as you can see, it's starting like to try to find patterns. This is like a pattern. It bought already here, as you can see, and it's waiting for the target. Now, let's just zoom out a little bit so it will become like Still didn't achieve like a daily target for this, but okay. So, okay, let's just also share the graph. Don't worry about this. This is just the first stage of the testing. It's just we want to know using this indicator how many consecutive losses we will get. Okay.
Yeah.
So this will give us a very clear idea when to start adding, because as you know, with martingale and with other progressive ways of sorry, I have a major mistake here. I'm running it on the 15 minutes. I should be running it on the 1 hour, because the 15 minutes should be used in a different way. I'm sorry for that. Okay, this will be even faster. So let's see. All right. So, okay. So from the tests that I have done, I have found that if you want to just do this like on full automation, the best time frame to use for harmonic patterns is the 1 hour.
Mm-hmm.
Okay. Now, what we need to know is how many consecutive losses we will have. And once we have this information, we will also know the consecutive, we will also know the average losses, which are like consecutive, because these two information are available in every backtest in MetaTrader 4. So once we have this information, we will be able to know when we have to start to compound or like add on our position. So until we have this information, then we cannot add on our position. You know, it will be like adding blindly, because if you know that a strategy will lose 5 times in a row, it doesn't make any sense, like in martingale or all these strategies, when they start to compound after the loss directly. Do you know what I mean?
Yeah, I know. Yeah.
So we have to know how many consecutive losses we will get before we start to add. This is the critical information that we need before we add on our positions. Now it's running this test quick. It will be running faster when we do the without the screen, but it's just I needed that I show you how it works. So it waits for a harmonic pattern, and then it says like whenever it happens, and then that's it. So now maybe the stop loss I am putting, which is 20% of the ATR, sometimes it can be tight. Also, I have a parameter for reversing the trades, because you know that harmonic patterns are reversal patterns. So which means they are against the trend. You get me, yeah?
Yeah.
Okay. So if we want to go with the trend, we can reverse them. So we have the option here, as you can see, to reverse. But here I set it to false. Okay, now we have it. We have what we need for the last year, which is ready. The information we need for the last year is here. We have the maximum consecutive losses was 9. The average consecutive losses was 5. So it means if we take 9 and 5 and average them, we will get 7, correct?
Yep. Yes.
So it means we cannot start to add to our position. So if we are trading like 0.1 lot and we want to trade like a bigger size, it means we shouldn't be doing this before we reach the 7 losses.
Right, yeah.
Okay, and then we can be aggressive on our positions. So this is, for example, how we can do it. Now, we know that we should be trading like, this is like a $10,000 account. You can do it like 0.01, let's say, or 0.1. And here, the information we have to give to the EA is For the first 7 trades, we will be using only one coefficient. You know what I just said.
Okay.
Okay.
Yeah.
And then we can start to add aggressive. We can use 3, 5, 8, 13. Okay. And since it didn't lose more than 9, so we shouldn't need the 13. But it just in case, you will know why after I show you.
Yeah.
So now I will disable to make it faster. I will disable the visual. Now you can see that the in the test, the total net profit was minus $30. Okay, it was nothing, but the maximum drawdown was like 1.91% for the last year. Now we will do the last year at, with the same settings, just changing the size progression. Okay. And this will show you what will happen, and then we can run it for 5 years and you will see the magic. Okay. As you can see here, it didn't start activating the progression. It's waiting for 7 losses. Now it will start to activate it. You see how it starts to go?
Yeah.
So once we do it the correct way, because in martingale, the martingale doesn't know that how many consecutive losses you have to wait. It just starts to multiply. You know what I mean?
Yes, that's right. Yeah.
So this doesn't do it blindly. This will do it because you know that you have to wait like how many a number of consecutive losses, and you are choosing when to start to add and how much to start to add. So in this case, okay. So here, instead of losing 29, now we have like 248 plus.
Right. Yeah. There's a big difference.
Okay. There's a huge difference between loss and and now we can, if we want to do it like aggressive, we can go aggressive for the last, I will just start 5 years because it's out of sample, because we were working only on the last year for the numbers, but I just want to show you that they apply even if we go like backwards so much. So this will, okay, this will just demonstrate the importance of working with this idea of waiting. As you can see here, this is out of sample test. You see, it made the losses and then it just worked.
And then once it does that, it goes back to the beginning again, or?
Yeah. Once it does that, because you have already made your profit, so it will go back to 0.1. So as you can see here, the trade is 0.1. You see?
Oh, okay. Yes.
0.1. Here it was doing the 1.3 because it's 13 times according to what we said, but now it's waiting for 7 losses to start to work with our progressive numbers again. It's adding like, it's waiting for the market to make the losses. This is the important part. It's not like going blindly. So, and
waits for the optimal time to add in after your
Exactly. So as you can see, it's this is okay. This can be applied on 15 minutes, but not in the same way. So if you want to apply like on this, because I didn't add any filters for the harmonic. So if you want to add, if you add filters to the harmonic, like trade with the trend, like times of taking trades and other stuff, you can improve much the performance. But this will give you an idea of the importance of the progressive numbers, because this is the secret of long-term profit in the market. Having a strategy to progress your lot size. even with a normal strategy. Now, this is not a normal strategy, but it's a good strategy. Yeah, what I will show you, which is amazing in this, that this strategy has 35% only winning rate. So with a strategy of 35% winning rate, we have turned it into a money-making machine. So it's like, instead of losing, you can be confident you are making money. And if we add filters, we can increase the winning rate from 35% to above. So imagine if we increase the winning rate on harmonics to 50% or 70%, then you can have big returns, you know, on this. You get what I mean?
Yeah.
This is all, I mean, the thing that I'm demonstrating here today is not the harmonic patterns. What I'm demonstrating today,
money management,
is the importance of using money management or position sizing. How to do position sizing, how to do it the right way. The right way is letting you letting the system, the backtest of the system tell you how to do it. If you do it blindly, like for example, some people will start to say, I will put a martingale, I will put arithmetic mean, I will add, I don't know how. This is all guessing. But this way, we are not guessing. This way, we are taking the system, testing it, and reading the statistics or the data that the system gave us and doing accordingly. So we will know for every pair what we should have as the progressive numbers. So this is the major information. Now I'm applying this on 1 hour because harmonics work. If I just put it like automatic like this, harmonics are usually the best on 1 hour. After testing them, I found them the best after 1 hour. However, if you want to use it on other systems for intraday trade, for other things, but you need this information. You should have a system. You should know what is the maximum consecutive losses, and then you will be able to start adding. So this, you can apply the same system on any time frame, but you need this information. You need this information. It's very important information. You need to know the system you are using, how many consecutive losses, and what is the average consecutive losses. These are the most important 2 pieces of information in the backtest to make it go like this. Okay? Yeah. I think it will just finish in a second. Now it will give us the thing after we finish here. We will know what are the maximum drawdown, and then we can decide on the system. Now, something I will tell you, you know, even these drawdowns, if we take the, there's a piece of software which will tell us what are the best times not to trade, because this system, it enters only 1 trade at a time. So it's not like any kind of grid or martingale or it will work with any broker with FIFO or anything like this. You know what I mean?
Yeah, yeah.
So there is no restrictions on this. Okay, we still have like a bit to finish the test to show you how it works. Okay, so as you can see, it's a very steady and stable equity curve. Even if you have the drops here, they are okay. They are. This is what I mean. This is a system which is 35% winning, and then we turned it into like this. This is very. I think you will appreciate if you have been trading for some time. You appreciate the importance of turning a system which has a 35% winning rate into a steady upslope.
Yes, yeah, that's great.
So this is okay. Let me show you. So even okay, this is really good. You see this? The profitable trades have been only 23%.
Yes.
And we have been able to make 20% with a maximum drawdown of 10% with a system which is only 23% profitable.
Yeah, that's good, isn't it?
Yeah. So if we put filters, because I didn't put any filters to the harmonic pattern, if we put filters, we can increase the profitable trades. Now, there are several kinds of filters. The easiest filters we can do is something called, this I will show you how it looks. It's something very easy, and it will just give you a very good idea how things can happen. This is a software to tell you, for example, what are the best hours to trade, what are the hours not to trade, and stuff like that. So let's just take this information we have here, copy, and then we go to this system. Let's just put it, and just yeah, we just paste the report. It was 1 hour. Zoom, load. So here, this system has something interesting. It will tell us, okay, we did like every year, every month, you have like the results. Every year was a winner. All right. So yeah, percentage wise, in percentage, it will also give you the, this is in money, in pips, in percent. So as you can see, the losses were like very, very small. Like the maximum, I think, was like a month drawdown 3%. However, what we appreciate is the trade analysis. Now, what this will tell us is something really good. It will tell you that this is the by trade entry time. Okay.
Right. Yep.
So this is like, as you can see, open time here. So if this will tell you, if we limit the EA not to trade at 8 and not to trade at 17 hours and not to trade at 20 and not to trade at 22, all the red, we cancel them. What will happen? We concentrate on this. The equity curve will increase a lot. Let me show you like just a very quick example how this can change and change the results. At 8, we don't want 17, we don't want 20, we don't want. So 8, 17, 20, and 22. So we come to this one. And we say, okay, so we don't want 8, 17, 20, and 22. Now,
I think it's 20. I think it was 23, but 20. Yeah, we'll try 22.
Let me check. 22 it was, I think.
Oh, okay, sorry.
Yep. You didn't have it, doesn't matter. Okay.
Okay, yeah, sorry.
Yeah, what if analysis. Okay, and then create what if scenario. Now the what if scenario has been created, it's here. Okay, so instead of having, as you can see, this is the what if scenario without trading these hours in a very quick manner. So what you can see here is that our performance, net profit, it jumped from 21% to nearly double, 36%. And the maximum drawdown, it went down from 8% to 5%, just doing this very simple, because if you know that a system trading at 5, if it takes a trade at 5, then mostly it will be losing. I mean, it's very logical not to take trades at 5. Just cancel the, put a limitation on the system not to take trades at 5. You know what I mean?
Yeah, yeah.
It's just a very logical. Now, the number of trades went down, but the number of wins went up, and everything, even the symmetry, which means that the shorts and the longs also went up. The drawdown went down, the maximum drawdown down, and I mean, it just made an improvement on everything. So if you look at the chart, it just looks much better now, you know?
Yeah.
Just doing this simple thing. Now, these things are very easy to implement, like restricting time. So this is like This is like a good example to show you. Let me just, yeah. So yeah, this is the power of using size progression. This is the importance. This is something different than any other strategy for adding your lot size. This will tell you how to do it the right way, which is going to your report and looking at the maximum. This is the number, maximum consecutive losses, which you should know, and the average consecutive losses. Then you just divide them and start adding from there.
Okay.
Here you have 12, here you have 5, just divide them and just start adding from there. And then you will get a big shift in the results. You will have something like this. So from a system that wins only 23% of the times, you will get a steady equity curve. This will give you so much confidence in your trading when you know this kind of information. You know what I mean?
Yeah.